Today we are talking everything credit. By the end of this video, you'll know almost everything about credit as well as how you can start building it from scratch. Now, what is credit and why does it matter? Your credit tells the bank how likely you are to pay them back and if whether or not they should give you a loan. Think of your score as a grade that is assigned to you for how well you handle your money. It's like a financial report card. The higher your score, the better you are at handling your money and the less risky you are to lend to. The lower your score, the worse you are at handling your money, which means that the bank won't trust you to pay them back. So it'll be harder to get a loan for a car or real estate or whatever else you might need a loan for. A higher score will also allow you to get lower interest rates and save a lot of money. If you know how to leverage debt, it can also make you a bunch of money. Now let's break down credit and look at how you're graded or assigned a credit score. So number one is your payment history. This makes up roughly 35% of your score. This is a record of your on time and late payments from your past credit cards and loans. So late payments can lower your score, like really lower your score because it makes up the majority of your credit. So make sure to always pay your credit cards and loans on time when the payment is due. I also suggest setting up auto payments and enabling account notifications to lower your chances of missing a payment. The second biggest factor making up your credit is credit utilization. This makes up 30% of your score. So credit utilization is the percentage of your total limit that you're using. So for example, if you have a credit card with a limit of $1,000 and then you spend $500 of that and then you only make the minimum payment of $25 at the end of the month, then your credit utilization will sit around 50%, and that is very high. To get the best score possible, you have to smash that like button and keep your credit utilization very low. Keeping your utilization under 30% is generally recommended, but I keep mine well below 10%. And my credit is excellent even though I've had some recent hard inquiries. So basically keep your credit utilization as low as you can, because if you use most of your limit and carry a high balance, then you'll make the credit gods nervous and they'll lower your score. Let's look at another example here. If you have a credit card with a $1,000 limit and you spend $500 on it, but this time you pay it off in full by the end of the month, you'll have a credit utilization of 0%, which is amazing. It's definitely better than 50%. So when I recommend keeping your utilization under 10%, I'm not saying that you can't spend more than 10% of your limit. I'm just saying that you can't carry a balance over that 10%. If you make a $500 purchase and pay it all off at the end of the month, you're good to go. But if you don't pay it off, that's where you can run into problems. I actually suggest paying off your credit cards in full every month. This will create really good habits because you'll only spend what you have and you won't go into bad credit card debt. I've actually been paying off my credit cards in full every month for the most part, and my credit is doing excellent. Also, please note that credit utilization is measured through a percentage and not a number. As your credit increases, the amount you're able to spend and keep your credit score good will also increase. So for example, at a $1,000 limit, 10% is $100, but at a $10,000 limit, 10% is $1,000. And just because your credit limit increases doesn't mean that you should also increase your spending. The next biggest factor is the length of your credit. This makes up 15% of your score. The more credit history you have, the better your credit will be. So the sooner you start building your credit, the better. This is why you should get a credit card as soon as you turn 18. This will start building your credit history extremely early. Quick side note for people that are under 18 that want to start building credit. Become an authorized user. Doing this under your parents will sort of transfer their credit over to you. So if they have bad credit, don't do this. But if they do have good credit, have them list you as an authorized user and you'll get a brand new credit card under their account. If they don't trust you with the card, just have them hold on to the card. Now back to the length of credit. Now, let me give you an example of how the length of credit works. What they do is take the average age of your open accounts. This is the total age of your accounts over the total number of accounts you have. So if you only have one credit card and you opened it 2 years ago, your average age is 2 years. If you were to open another account today, that average age drops to 1. Why? Because 2 years of age over 2 accounts is 1. This is why you shouldn't close old credit card accounts, because it can lower the average age of your accounts, which will then lower your score. So if you don't want to use your old credit cards, cut them up or something, but don't close the account. So make sure to start ASAP because this portion takes time to build. Even for me, this is one of the things that's holding my score back from getting to that perfect 800. Number 4 is new accounts, or the total number of inquiries on your credit report. This makes up 10% of your score. Every time you apply for a credit card or loan, you'll get a hard inquiry on your credit. Having too many of these makes you seem riskier because you're now going out and asking everyone for money. Trying to open several credit accounts over a short period of time represents greater risk. So the credit gods are going to be like, you good? We're lowering your score to keep you in check. When you go out and apply for credit, you will get these inquiries, but as long as you're not applying for a bunch of credit cards or something at the same time, you'll be fine. Your score will take a temporary hit after you apply for credit, but you need to take that hit so that you can increase your credit score over the long term. And these hard inquiries only stay on your credit report for 2 years. After that, they're gone. But their effect on your credit score shouldn't last more than a few months or up to a year, as stated by Experian. Also, whenever you're shopping around for loans or credit for a home or a car, you will get multiple inquiries on your report. But all of those inquiries will only affect your score how only one inquiry would, as long as they all happen within a 30-day period. The last thing is smashing that like button. The last thing is your credit mix, and this makes up 10% of your score. Mortgages, auto loans, student loans, and credit cards are all different types of credit. Having different types of credit shows lenders that you can manage your debt. This means that you can make your payments on time, which makes you less risky to lend to. Okay, so a good credit mix can help your score. Does that mean that you should start applying for a bunch of different credit lines such as auto loan or mortgage? No, because that'll affect all the other factors we've talked about, such as length of credit as well as new accounts. Now, you might already know this, but here are some things that don't affect your credit. If you don't want to hear this part, you can skip ahead by a minute for my first credit card recommendations to start building your credit from scratch. So first is checking your score. This can be done through your bank or apps like Credit Karma. This will not lower your score no matter how many times you do this. Number 2 is rent and utility payments. These also don't affect your score because they're not reported to the credit bureaus. Number 3 is your income and your bank balances. Getting a raise or a bonus or an extra commission doesn't help your score. And credit reports only list your credit accounts, not your checkings, your savings, or your other investment accounts. So your balances in these accounts won't lower or increase your credit score. Now, if you don't have any credit cards are the best way to start. Here are my top 2 credit card recommendations to start building your credit. Number 1 is the Discover It Secured Credit Card. Secured credit cards are a great option for people with no credit. They require an upfront refundable deposit, which is usually equal to the credit card's limit, which is why they're so easy to get approved. That deposit is returned to you once the account is upgraded to a regular account or once you close your account. They also have a Discover It student card if you're a student with no credit, and that one requires no upfront deposit. Another great option for people with no credit is the Pedal 2 by Visa. This is a great starter card, and unlike the Discover It secured card, it doesn't require any upfront deposit. It also doesn't have any fees. I personally don't have this credit card, but I've looked into it and I've heard nothing but good things about it. Now, before you smash that like button and leave, I do have some final tips I want to finish with. A lot of this does go hand in hand, so over time, as you get more credit and as your credit limits go up, you'll hopefully utilize less of your credit while making your payments on time. Over the long term, this will increase your score a lot. Just mainly focus your credit building efforts on making your payments on time and keeping your credit utilization low relative to your limits, because those factors make up 65% of your score. Don't try to rush the process. It does take time, and like time is literally 15% of your score. So like I said, it all goes hand in hand. Just make sure that you're being consistent with everything I said in this video and your score will definitely go up. And you want to shoot for a score in the excellent range of 750 points and up, because at that range, you'll be able to save a lot of money on interest. If you enjoyed and found value in this video, please make sure to hit that subscribe button as well as that notification bell so that you don't miss any of my new videos. And until next time.